I would like to start our 2025 Investor Day with a closer look at the evolution of the CX market. For many years, the CX market has enabled brands around the world to engage their customers through a variety of communications channels. Those brands have made large investments in CX with a strategic objective of elevating their customer experience. Looking back at how brands have invested, it was predominantly through growing the workforce. In fact, we estimate that currently brands are investing only 5% in CX technology and the remaining 95% in a large workforce. As we all know, continuing this approach of hiring more and more people is not sustainable. Today, the CX market is in the early stages of addressing this unsustainable labor challenge. The recent advances in AI-powered automation make it possible to fully or partially automate CX workflows. Verint recognized the CX automation opportunity very early. More than 3 years ago, we started to build our CX automation platform. With the launch of this new platform 5 quarters ago, our customers have already started automating their manual CX workflows and are reporting groundbreaking AI business outcomes. The primary challenge for brands in their CX initiatives is the unsustainable cost of labor. Today, brands are using many workflows in their efforts to delight their customers with superior customer experience. Because these CX workflows are mostly manuals, anytime they want to improve CX, they are required to increase what is already a large and expensive CX workforce. We estimate that brands employ 50 million CX employees globally. At an average cost of $40,000 per employee per year, we estimate global annual spend on the CX workforce is $2 trillion. CX has always been a strategic priority for brands and is mission critical. However, if brands continue to rely on their existing manual CX workflows, they will have no choice but to continue to hire an even larger workforce. Automating manual CX workflows to reduce costs and elevate CX is a big opportunity, and Verint is leading the way with our differentiated CX automation platform. With the emergence of innovative AI technology, the Verint CX automation platform is quickly evolving at a pace we've never seen before. Brands are now able to automate more and more steps of their existing workflows and quickly benefit from strong AI business outcomes. These are tangible outcomes driving real measurable value. Because the economic benefits for brands are so significant, CX automation is now an important solution category in the CX market and an integral part of the enterprise technology ecosystem. Let's take a look at a customer example. In this example, a brand is spending $200 million annually to employ a CX workforce of 5,000 employees. The brand CX workforce operates manual workflows to engage with its customers across a variety of communication channels and business topics. With the deployment of Verint's CX automation platform, this brand can successfully automate steps in its manual CX workflows, increasing its workforce capacity by 20%. This 20% capacity increase is equivalent to the work of 1,000 employees, and therefore, the economic benefit for the brand would be valued at $40 million per year. Deploying Verint's platform would cost them $2 million per year, delivering a 20x ROI to the brand. In other words, the brand invested $2 million in technology and created workforce capacity valued at $40 million. This example demonstrates that it's very compelling for brands to increase CX automation. This is clearly a win-win opportunity for brands to achieve significant ROI and for Verint to accelerate its growth. Throughout today's event, we will showcase powerful outcomes that our customers are already achieving today. To help me with that, Jason Williams, a Global Vice President of Corporate Marketing, and Kelly Kelleher, a Vice President of Content Marketing, will facilitate several customer stories. Let's start with Jason.
Fiserv is a large fintech provider. They set a strategic goal to ensure that each customer interaction meets all compliance requirements, avoids penalties, and reputational damage. Before deploying Verint CX automation, Fiserv's compliance workflow consisted of numerous manual steps or micro workflows, one of which required a manager to listen to calls and confirm that agents were meeting compliance requirements. This cost of manually listening to calls is very high, and therefore managers were only listening to a small sample of calls. Fiserv deployed the Verint CX automation platform to automate this micro workflow. Let's take a look at the AI business outcome.
That's a huge thing to go from less than 1% coverage of your calls to 96%, that without adding any FTE. If we wanted that many people to listen to the amount of calls that AQM evaluates, we'd have to hire over 1,200 employees.
The numbers from this story are astounding. Without automation, Fiserv would have had to hire 1,200 compliance managers to review all of those interactions. That's about a $90 million annual labor spend, which is obviously not feasible. AI-powered CX automation from Verint was the only way Fiserv could reach their goal of screening every call for compliance issues. This is a great example of how a Verint bot can automate a single workflow and create massive value.
Utilita is an energy and gas supplier in the UK. They were looking to increase CX automation in the contact center and deployed Verint Copilot bots to automate agent workflows and increase agent capacity. One of the micro workflows they automated was call wrap-up. During call wrap-up, the agent had to create an accurate summary of the call and post it to the Utilita database for future reference by other agents. This manual micro workflow was automated by the Verint bot. Let's take a look at the AI business outcome.
My name is Leonard Smith. My title is Head of Service Insights at Utilita Energy. On after-call work time, or ACW, we've seen about a 35-second reduction, which to me just means that the wrap-up bot is doing its job, and it's doing it well.
Utilita was able to reduce average call length by 35 seconds. Given an average call of 5 minutes, a 35-second reduction is equal to 10% increase in agent capacity. After the 60-day trial period was complete with an initial group of agents, the AI business outcomes were so clear that Utilita increased their order by 800% for the Verint bot. Volaris is an airline in Mexico, handling 5 million customer interactions each year. Controlling service costs is critical, but the brand was also looking to elevate the customer experience at the same time. Volaris uses the Verint CX automation platform to automatically respond to customer questions, complete tasks, and drive sales, and they plan to expand platform usage to Copilot bots that automate agent workflows for increasing agent capacity. Let's take a look at the AI business outcomes Volaris has achieved so far.
My name is Iker. I am the Senior Manager of Customer Care, and I work for Volaris. It's a Mexican airline. We are receiving 3 times more volume than we received in the past, with the same number of agents, with 30% higher CSAT, 20 hours less in the response time, and 70% less cost per customer management. So we use the bot for frequently asked questions and also for transactional processes, and the containment rate is higher than 85%. With this solution, we are not only solving customer service requests, we are also improving their customer experience, increasing sales. We are adding AI to our agents. It's like agent assist, and the idea is to reduce the average handling time.
We heard from Iker that Volaris is containing over 85% of their customer interactions with automated responses, resulting in 70% less cost per customer. And at the same time, their CX has been elevated, resulting in 30% higher CSAT score. This means Verint AI-powered bots are responding to customers with high accuracy, eliminating the need to speak with agents. We also heard that Volaris is continuing to expand their use of AI with additional bot consumption. They will be adding our Copilot bots to automate agent workflows to further increase agent capacity and drive down costs while maintaining an excellent customer experience.
We will hear from several more customers in a few moments. But first, let me take a deeper look at our platform. We launched the Verint CX automation platform 5 quarters ago and already have many customers reporting strong AI business outcomes, such as the ones you just heard from. Leveraging more than 2 decades of CX market leadership in the workforce engagement category, we've extended our platform to now also become the leader in the new CX automation category. As a WFE leader, we've deployed software that powers CX workflows across 4 million agents across many of the largest brands in the world. We've gained strong domain expertise and intimate knowledge of how CX workflows are designed and how they can be automated. Today, our platform is highly differentiated in its ability to deliver stronger AI business outcomes than any other CX vendor's offering, and also in its ability to deliver these strong outcomes into a customer's existing ecosystem without disrupting the customer's operation. We designed our platform in a manner that allows brands to adopt automation gradually and prove the value of the platform in the customer's own environment. our AI monetization strategy is to enable customers to start with a low level of automation consumption and then increase the level of automation over time as they see the ROI our platform can deliver. Later on, we will expand on our AI monetization strategy and how we drive incremental revenue for Verint. Our platform currently offers more than 50 different AI-powered bots. Each bot is uniquely designed to fully or partially automate specific steps of a manual CX workflow, each of which we refer to as micro workflow. We invented a differentiated approach to CX automation based on automating these micro workflows with bots that are uniquely designed for each specific task. As a result, each of the Verint bots automates a specific micro workflow and does it very well. Due to this high precision of the bots, we're able to drive the desired AI business outcomes for customers. This best-of-breed approach to AI-powered bots is resonating well with our customers. We continue to innovate at a very fast pace, introducing new bots in our platform quarterly and increasing the automation value delivered to customers as new AI models become available in the market. Later, Jamie will elaborate on our strong platform differentiation. Verint CX category leadership is evidenced by the success of our customers, more and more of whom are reporting strong AI business outcomes. Many iconic brands have already upgraded from Verint WFE to the Verint CX automation platform to increase the automation of their manual CX workflows. Enterprise customers are in early stages of adopting AI-powered bots, and we see two key customer requirements emerging in the market. First, the ability to deploy best-of-breed automation quickly into existing technology ecosystems without long, disruptive, and expensive infrastructure changes. Second, the ability to consume automation gradually, first proving the AI business outcomes in the customer's own operations, and then easily expanding AI consumption and only paying for automation that drives proven value. The Verint CX automation platform addresses both of these requirements extremely well with its open hybrid cloud architecture and our unique approach to AI-powered bots. Next, I would like to review Verint's strong differentiation across 4 areas. First, Verint is laser-focused on automating CX workflows. Second, our CX automation platform is highly differentiated with a hybrid cloud architecture. Third, our large customer base includes many of the world's leading brands, and working with these customers provides us with deep domain expertise. And fourth, many of our customers have adopted our CX automation platform and are already reporting strong and differentiated AI business outcomes. Regarding our competitors, there are several classes of vendors delivering technology to the CX market, some focused on communication channels, some delivering CRM software, and some delivering technology infrastructure. None of these vendors have the same focus and domain expertise in automating CX workflows the way Verint does. We believe our competitive differentiation is sustainable and positions us well for CX automation category leadership. I would like to end this portion of today's agenda with an overview of our financial model. Over the last 3 years, while developing our new CX automation platform, we also completed transitioning our customer base from a perpetual license model to a recurring subscription model. In fiscal 25, our subscription business represented approximately 80% of our total revenue, and going forward, we expect the growth of our subscription business to accelerate. Regarding perpetual licenses, we have certain customers that continue to purchase in this model, mostly in the financial services sector, with a focus on compliance use cases. Going forward, we expect our perpetual license and professional services revenue to remain relatively flat. The transition to subscription model required significant effort, and its completion is a key milestone. With this completed, we expect our subscription ARR to accelerate growth in fiscal 26, driven by AI adoption. We believe many customers are now ready to invest in CX automation as they see the strong AI business outcomes reported by more and more of their peers. Later, Grant will discuss our outlook in more detail. And now, let me turn it over to Jamie to review our platform differentiation. Jamie?
Thank you, Dan. As we've expanded the Verint market position from WFE category leadership to CX automation category leadership, we've designed an open cloud platform with behavioral data and DaVinci AI at the core. I'll now dive a bit deeper into Verint's unique platform and how we're able to deliver these differentiated business outcomes for our customers. Let's start with what is a Verint bot. Each Verint bot automates a particular step of a manual CX workflow. These manual micro workflows are carried out by agents or other employees across the enterprise. The Verint bot is designed to replace that manual effort with automation of some or all of the workflow. The Verint bot is designed for one task and does it very well, driving a tangible AI business outcome. Verint bots offer customers a complete end-to-end automation solution, which leverages the latest Gen AI models as needed. Alternatively, customers may choose to develop automation themselves. Many AI vendors offer toolkits that allow customers to program with generative AI. Such customers will need to train AI models on relevant data, perform ongoing AI tuning, and build an automation solution that's embedded into their existing workflows. Customers that choose this approach will need to invest significant development resources, as they need to develop many different automation solutions for the various manual workflows in their CX operations. Deploying bots from the Verint platform is much less expensive than internal development and delivers business outcomes now with the best-of-breed results. Verint offers more than 50 different bots today, and we continue to innovate, adding bots every quarter. Because each bot is designed to automate a specific micro workflow, customers can choose to increase automation gradually by increasing bot consumption from a comprehensive CX automation platform. The differentiated AI outcomes that you are hearing our customers discuss today are driven by a variety of bots. While each bot is doing one task, they're created in the platform in the same way. This makes the Verint platform highly scalable and enables us to continue to innovate quickly ahead of the market. Let's take a look at the key pieces of Verint platform used to create Verint bots and deliver amazing AI business outcomes with each bot deployed. Once we identify a CX workflow that is ripe for automation, we create a new bot in the platform bot factory. The Verint DaVinci infrastructure allows us to evaluate a multitude of Gen AI, proprietary, and open source models to assess the performance needed for the specific workflow we're trying to automate. Models vary widely in terms of accuracy, language support, latency, context size, and cost, so choosing the right model is not a one-size-fits-all approach. This open approach to models allows us to incorporate the latest and greatest models and capabilities, such as agentic AI, as they become available. This allows our customers to keep up with the breakneck pace of AI innovation and future-proof their investment in the Verint platform. As the new bot emerges from the bot factory, we train it on Verint's unique data set that includes CX data spanning every industry and workflow for the last 3 decades. This training provides superior outcomes from our bots on initial deployment. However, all AI degrades over time, so we created a continuous training process that makes Verint bots increasingly accurate for each customer by specifically tuning to that customer's data. The same bot deployed across 2 customers will have unique models because of the continuous training on that customer's specific data. The final important step is to integrate the bot into the applicable CX workflow, which requires strong domain expertise in best-in-class CX operations. Over 50 Verint bots use a wide array of AI models because there is no single model that delivers differentiated outcomes across all of these CX workflows with the right balance of price and performance. Another differentiation of the Verint platform is the speed at which we can deliver Verint bots into increasingly complex customer environments. Our open platform architecture, specifically our hybrid cloud approach, is a tremendous accelerator for customer adoption and the special sauce that enables us to deliver outcomes to customers faster than any competitive offering. Why? Because our competitors front-load a tremendous amount of infrastructure work, cloud migration, channel replacement, IT development, in order to take advantage of their AI capabilities. Verint takes a dramatically different approach where we minimize change as much as possible and seamlessly integrate the Verint bot into the customer's existing environment. Our approach allows brands to integrate with their on-premises applications without first doing a large migration. This approach lends itself to dramatically accelerated outcomes and facilitates incremental adoption so our customers can start small, prove the tremendous value we can deliver, and then scale up from there. Today, we'll show you examples where customers start with one group, one bot, and in months, scale across their organizations with more bots and much larger teams. Business leaders are growing weary of the unfulfilled promises of AI and subpar results from internal projects. Due to these failed deployments, businesses are often paralyzed when trying to move forward with AI, pushing for more and more science projects that lead to no operational value. When I speak to customers, I tell them that there is a better path and real business outcomes are possible today. By partnering with Verint, they can deploy complete AI solutions to real business problems without waiting for internal teams to become AI experts or waiting for IT to develop custom solutions. By taking away much of the AI confusion, Verint is able to focus our customers on massive business outcomes they can achieve now in their existing ecosystem. Now, let's hear from Vic Roads about their experience. Vic Roads is a private company that serves as the Department of Motor Vehicles for the state of Victoria in Australia. As part of privatizing the organization, they set strategic goals for efficiency and CX and started a massive IT and business transformation. They came to Verint looking to automate the agent workflow, to lower operating costs, and to elevate customer service to the citizens of Victoria. Using the Verint Copilot bots, they're already achieving these goals. Let's take a look at their AI business outcome.
Hi everyone, I'm Trish Ruja. I'm the IT Director of Modernisation at Vic Roads. Within our business, we're really looking at how do we drive efficiencies. We are trying to drive out cost, trying to improve the customer experience. So we're seeing significant savings across all of our interactions with our customers. So the time we spend on a call has been reduced significantly by about, anywhere from 30 to 40, 50 seconds. And that's really significant in a call centre. Obviously, the shorter the calls, the better. The way that we're using AI is really about improving the customer experience and the agent experience. So being able to analyse what people are calling for allows us to enable them to get through faster paths. It enables the agent to actually know what they're calling about.
Vic Roads talked about 30 to 50 seconds per call with the Verint Copilot bots. This means their agents are assisted by Verint bots in real time, and that resulted in agent capacity increasing 10 to 15%. Verint Copilots automate many of the common tasks that agents carry out during an interaction. An example of one of these tasks is an agent manually searching for content. Through our Copilot bot, instead of agents manually searching for the right content while a customer waits on hold, the Verint bot automates the search and delivers the right information to the agent the moment they need it. Another customer is BNP Paribas, a multinational financial services company with over $2 trillion in assets. It's critical for financial organizations to ensure that every customer interaction meets quality standards. Before Verint, BNP Paribas was using a manual workflow to listen to calls and verify quality. This workflow was time-consuming and expensive and resulted in only evaluating a very small sample of interactions. So they turned to Verint to automate this workflow. Let's take a look at the AI business outcome.
I'm Rafał Przewoźnik. I'm omnichannel expert in BNP Paribas Poland. So it would have taken us an additional 750 quality managers to do that, what quality bots are doing for us. We have noted a 25% improvement in quality. This quality improvement also has a direct impact on our compliance and lowers our exposure.
Again, we see a massive AI business outcome from automating workflows. With the Verint bot doing the work of 750 quality managers, BNP Paribas saves tens of millions of dollars. Furthermore, as you heard from the customer, Verint bots are highly differentiated, delivering better results than the customer was achieving with supervisors manually evaluating calls. Another customer is Serco, an Australian BPO. They were looking to improve employee experience and reduce employee churn. One of their CX workflows was related to employees requesting schedule changes. To process a request for a schedule change, the supervisors had to manually run scenarios and identify another agent for the shift. This manual workflow was very expensive, and in many cases, the agent request was denied. Serco deployed Verint TimeFlex to automate this workflow.
My name is Sky Giacometti and I chair the Workforce Management Governance Committee for Serco Community Services within the Asia Pacific region. Now that we've started using TimeFlex, we've seen our attrition drop as a result, statistically significantly so. People are much more likely to stay. So there was a distinct correlation between people who use TimeFlex and people who don't use TimeFlex and their retention. So it wasn't just the idea of being able to have flexibility that drove up retention, but the people who actually used TimeFlex are the ones that we were more likely to retain. So the employees are more engaged, they're less likely to leave, but I've also noticed that we have had significant improvements in scheduling efficiency. So there's actually a real positive to the company in that regard, because our over and understaffed intervals smooth themselves out, which means we're getting more value for the labour that we are putting into schedules.
TimeFlex is unique in the market, built on Verint proprietary AI. As you have heard from Serco, TimeFlex decreased attrition and improved employee satisfaction dramatically. Replacing an agent costs on average $4,000, including hiring and onboarding expenses, and many call centers see annual attrition of 30% of their workforce. By giving employees the work-life balance they need, Serco achieves a significant reduction in employee attrition, thus saving Serco millions of dollars in labor expenses. Now I want to turn your attention to how we monetize AI. Customers are reticent to make large commitments around AI without battle testing it internally and seeing concrete business outcomes. This is in reaction to failed AI science experiments and vendor promises that have gone unfulfilled. In order to accommodate this new customer dynamic, we've adapted our AI monetization strategy to allow customers to start small, prove outcomes in a risk-free manner, and then scale adoption quickly. Let's look at how this plays out in a few customer scenarios. During FY23, a leading healthcare insurer was grappling with AI adoption with multiple internal projects and vendors trying to bring AI into their CX workflows. With 30,000 agents in total, representing a spend of $1.2 billion in labor costs, this customer had ample opportunity for CX automation-driven savings. However, they've been challenged in early projects by vendors that mandated disruptive change in their ecosystem or those that simply couldn't deliver to their scale. In early FY24, they chose Verint to partner with for initial deployments of Verint bots because we were able to deliver results faster than any alternative due to our hybrid cloud architecture. They began small deployments of 8 different bots to automate their CX workflows. Within weeks, they saw significant AI business outcomes. Upon seeing the increase in capacity with a pilot group of 300, they began to scale to larger agent populations within 2 quarters. Our flexible architecture allows each bot to be scaled independently. With one bot, they chose to increase utilization to 30,000 agents, while other bots were increased to various levels. This success created momentum for bot adoption, and they expanded to other bots across the portfolio throughout the year, adding 6 additional bots in early fiscal 25 and 4 more in the third quarter. By Q3 25, the customer has deployed 18 Verint bots at various consumption levels. We believe that these bots deliver more than a 10% increase in agent capacity for the brand. The additional capacity Verint bots create has allowed them to address significant increases in interaction volume during the open enrollment period without having to grow their CX team. We see this pattern across multiple customers, with every bot following the same buying cycle. They start small, prove value, and then upon success, quickly expand usage and deploy additional bots. In this example, the brand did not immediately reduce their agent count, but instead used the 10% capacity created by our bots to accommodate bursts in volume and to reinvest in needed CX improvement to satisfy pent-up demands. To put this in perspective, this brand is spending $1.2 billion in labor costs, and a 10% capacity increase is equivalent to $120 million. Later on, Grant will discuss the Verint growth driven by this customer's successful journey. Now, let's hear from several other customers about their successful journeys, leading to an increased adoption of the Verint bots.
We started our pilot group with 200 of our team members, and at the moment we have extended across 6 business units and tripled our TimeFlex licenses.
Over the last 18 months or so, since implementing the Verint quality bots, we have ramped up from 100 agents. We are now evaluating just over 1,600 agents. We started off in the sales area, and based on the results and the success we saw in that area, we decided to move on to the collections area. So based on our success so far with the Verint bots, we are looking at implementing the wrap-up bot as well as real-time coaching in the near future.
In terms of how we're taking the core summarization solution with Verint forwards, we started off with a limited pilot of 100 FTE. We very quickly scaled that to 500 FTE by the end of 2024. The reason we could do that was the quality of the solution and the employee feedback we got. Our plan as things currently stand is that by the end of Q1, we will have scaled to 1,200 contact center staff. For context, that is everyone in our retail business and everyone in our health business who is customer facing in the contact centers. By the end of H1, we'll have adopted this in our commercial business, and that will take it to 1,700 FTE.
As you can see from the customer testimonials, we're achieving compelling outcomes in the initial deployment, which leads to substantial expansions. Woolworths is now adding 5 more business units in their next deployment. FNB is growing utilization by a factor of 16 while adding 2 additional bots. AXA plans to spend 17 times from the initial control group in H1 of this year. Verint's monetization approach is ideally suited to these customer dynamics, with programs designed to prove value at minimal risk, flexible licensing, and packaging to allow for rapid adoption. And with that, let me turn it over to Grant. Grant?
Thanks, Jamie. Today I will review 3 topics. First, I will review our strong AI momentum year to date and discuss our outlook for the full fiscal year. Next, I will take you through the key drivers of our fiscal 26 model. And finally, I will review our capital allocation strategy. Let's start with fiscal year in 25. As Dan mentioned earlier, We have completed our transition to a subscription model and expect approximately 80% of our total revenue this year to be from our subscription offerings, which includes all recurring streams: bundled SaaS, unbundled SaaS, support, and optional managed services. We are pleased with this milestone, and we expect our subscription business to continue to grow, driven by AI adoption. Regarding the remaining 20% of revenue comprised of perpetual licenses and professional services, we expect this revenue stream to remain flat. With the completion of our transition to subscription, we will begin to report ARR that covers all streams within our subscription business. ARR is a common metric, and first I would like to explain how it's applied to Verint. ARR represents the annualized quarterly run rate value of active or signed subscription contracts as of the end of a period. For unbundled SaaS deals, we use a ratable view in our ARR calculation. We believe ARR is an important metric for management to understand the performance of our subscription business for two main reasons. First, it provides management a view of the true growth of the subscription business, regardless of the term length of deals. Second, because we predominantly bill customers 1 year in advance, ARR for our subscription business is a good proxy for our annual billings. We also believe that ARR is a useful metric for investors since it represents the true growth of our subscription business, avoiding any variability associated with ASC 606 revenue accounting. Year to date, we have seen good growth in our subscription business driven by strong AI business outcomes. Let's look at this growth across three metrics. Bundled SaaS revenue reflects AI-powered solutions that have already been deployed in the Verint Cloud. SaaS ACV bookings reflect new deal activity by customers. And as we just discussed, ARR captures both what has been deployed by customers as well as new deal activity. Next, I'd like to take you through our year-to-date performance for each of these metrics. Starting with bundled SaaS revenue, we have seen an acceleration in our bundled SaaS revenue growth rates year over year throughout the year. In Q3, bundled SaaS revenue growth accelerated to 19%, up nicely from 15% in Q2 and over 9% in Q1. As we've discussed, our AI innovation is deployed only in the Verint Cloud, which we recognize as bundled SaaS, but made available to all our customers through our hybrid cloud model. We are pleased with our growth this year and expect a further acceleration in Q4 to more than 20% year-over-year growth, or around $80 million of bundled SaaS revenue. Turning to SaaS ACV bookings from new deals, bookings for new deals increased 34% in Q1, 29% in Q2, and 37% in Q3 on a year-over-year basis. We are pleased with our new deal momentum year to date and expect to finish the year with another strong quarter. In addition, due to the success of our hybrid cloud strategy, we expect minimal bookings from conversion deals for existing customers converting from on-prem to cloud. Overall, we are pleased with our new deal activity this year, which is driven by strong demand for AI business outcomes. Turning to ARR, ARR increased sequentially each quarter this year and reached $695 million at the end of Q3. Our ARR growth is being driven by a combination of strong bookings from new deals and solid renewal rates. We expect our ARR to continue to increase sequentially, and later I will provide our outlook for ARR growth for Q4 and for next year. Next, I would like to discuss how we have been monetizing the AI opportunity. Earlier, Jamie took you through an example for an AI adoption journey for a health insurance company. In their journey, the insurance company added 18 different bots at various consumption levels, driving an increase of 10% in workforce capacity, which is equivalent to $120 million in value if they were to hire people to do the same work. I would now like to walk you through how our ARR grew with this customer during their journey. As you can see from the slide, prior to beginning their AI adoption, the customer generated $3 million of ARR, most of it in the form of unbundled SaaS associated with our workforce engagement solutions. Their ARR steadily grew as they increased AI usage over the last 2 years, and their ARR increased from $3 million to $14 million. In addition to the significant ARR increase, I'd like to mention that the customer maintained their investment in Verint's on-prem solutions while at the same time significantly increasing Verint AI consumption in bundled SaaS, reflecting the success of our hybrid cloud model. Finally, I'd like to discuss the ROI this customer achieved. The customer spent $11 million with Verint to achieve an estimated $120 million of greater agent capacity, yielding an ROI of over 10x. I believe this customer journey is a great example of Verint's AI monetization strategy, helping customers gradually increase their AI consumption levels without disrupting their existing ecosystems while Verint increases its ARR. As we've discussed throughout today, customers are embracing our hybrid cloud approach to adopt AI without disruption, which means they continue to purchase both unbundled SaaS and bundled SaaS from us, as seen in the customer example we just discussed. From a revenue perspective, revenue accounting for bundled SaaS is ratable, but revenue accounting for unbundled SaaS is primarily upfront and can be a bit variable due to 606 accounting. Because of this dynamic, the form, timing, and term length of a small number of deals can have a big impact on our quarterly revenue performance, while at the same time having much less of an impact on our ARR and our cash generation. We have seen this dynamic clearly play out over this past year. In Q1, we exceeded our revenue guidance by $7 million. In Q2, revenue came in $2 million below our guidance, and in Q3, we overachieved revenue guidance by $14 million. This 606 dynamic and its associated revenue volatility will likely continue as customers embrace our hybrid cloud model. Therefore, we believe that subscription ARR and cash metrics are and will continue to be important metrics to help investors understand our business despite this volatility. Turning to guidance for the current year, as we discussed earlier, we are now introducing guidance for subscription ARR for the first time. Following sequential growth in ARR during the first 3 quarters of this year, we expect ARR in Q4 to come in at about $704 million, plus or minus 1%, reflecting 4% growth year over year, adjusted for a divestiture. I would like to mention that historical information for ARR has been added to the investor dashboard on our website. Regarding total revenue and diluted EPS for the full year, we are maintaining our outlook of $933 million in revenue, plus or minus 2%, and $2.90 of diluted EPS at the midpoint of our revenue guidance, each on a non-GAAP basis. Turning to cash flow, similar to other companies that have revenue volatility related to 606, we will begin to report cash contribution margin and operational efficiency metrics. Starting with cash generation, as discussed, ARR is a proxy for the annual billings of our subscription business. For perpetual and professional services, annual revenue approximates annual billings. Therefore, together they represent a good proxy for our total annual cash generation, which we expect to come in at about $905 million for fiscal 25. To get to our fiscal 25 cash contribution margin, we subtract our estimated annual non-GAAP COGS and OpEx from the cash generation metric. For fiscal 25, this calculation results in just over $210 million of cash contribution margin, representing around 23% operating efficiency. To get the free cash flow, cash contribution margin is adjusted for other items such as CapEx, depreciation and amortization, cash taxes, interest expense, and change in working capital. As we discussed in our Q3 call, we expect free cash flow this year to grow approximately 30% year over year. Now let's look at next year. For modeling purposes, we'd like to take you through some key metrics for a fiscal year-end 26 outlook. I will cover our expectations for ARR and bundled SaaS revenue, which are key growth metrics for our subscription business, and free cash flow for our entire business. We plan to provide revenue and non-GAAP diluted EPS guidance for fiscal year-end 26 during our Q4 earnings call once the current year is complete. Starting with subscription ARR, we expect our ARR growth rate to double next year and are targeting 8% ARR growth for Q4 fiscal 26 compared to 4% adjusted ARR growth for Q4 this year. Similar to the current year, we expect ARR to increase sequentially each quarter next year. We are targeting faster ARR growth based on our expectation for another year of strong AI demand. To put our outlook in perspective, year to date, we've experienced greater than 30% SaaS ACV bookings growth from new deals and next year, 20% bookings growth will be sufficient to drive the 8% ARR growth we are targeting. Turning to bundled SaaS revenue. As we discussed earlier, bundled SaaS revenue is a proxy for our AI growth, and we are pleased with our bundled SaaS revenue growth in the current year. We expect around $80 million of bundled SaaS revenue in Q4 this year, and to end the current year with around $292 million, representing 16% growth for the full year. Looking to next year, we expect our bundled SaaS momentum to continue, and our model assumes a similar level of annual growth. Turning to free cash flow. For fiscal 2026, we expect double-digit growth. Our free cash flow outlook reflects our expectations for operating leverage. For fiscal 2026, we're targeting non-GAAP COGS and OpEx to grow slower than cash generation growth, which will result in an operating efficiency improvement of around 100 basis points. The combination of 8% ARR growth and some margin expansion is expected to result in both our cash contribution margin and our free cash flow increasing at a double-digit rate. Finally, with respect to our balance sheet, we continue to be in a very good financial position. Our net debt remains under 1x the last 12-month EBITDA and is further supported by our strong cash flow. We have debt maturing in calendar 2026 and will be proactive about managing our balance sheet with the goal of maximizing value for our shareholders. In addition to strong cash generation, we have broad optionality with access to multiple capital markets. With regard to capital allocation, we expect the largest use of our free cash flow to be buybacks. As a reminder, we've been steadily buying back shares and started a new $200 million stock buyback program in September. In addition to buybacks, we may allocate some of our free cash flow to debt repayment and to tech tuck-ins. Our M&A focus is on small companies with interesting AI technology unique to CX automation. In summary, we are pleased with our CX automation category leadership, which is driven by the strong AI business outcomes reported by our customers. We are optimistic about our AI monetization strategy, which gives customers the ability to adopt AI without disruption and increase usage over time as they see value. We are also pleased that our business has been greatly simplified with the subscription model. Looking ahead to fiscal 2026, we are targeting ARR growth to accelerate to 8% next year with double-digit free cash flow growth. Beyond fiscal 2026, we expect ARR to accelerate to double-digit growth. I would now like to pass the presentation to Alan, who will talk more about our long-term growth drivers. Alan?
Thanks, Grant. To wrap things up today, I'd like to talk to you about why we are so incredibly excited about CX automation and our long-term growth opportunity. Today, brands spend an estimated $2 trillion on CX workforce and a relatively small amount on CX technology. As brands embrace CX automation, we believe their spending will shift from the CX workforce to CX technology. You can see the expected shift on the slide. The CX workforce spend in blue gets smaller, while the CX technology spend in gray gets larger. The blue reduction is much larger than the gray increase. Overall, we believe brands will receive significant net benefit from the reduction in spending. At the same time, we believe the TAM for Verint's platform gets larger and our revenue opportunity will increase. Earlier today, Dan took you through an example in which a brand with 5,000 employees spent $200 million a year on its CX workforce, and with a $2 million investment in Verint's platform, will be able to increase its workforce capacity by 20%. Increasing workforce capacity provides customers with flexibility to reduce agent headcount, or they can use the extra workforce capacity to elevate CX and increase revenue opportunities. We heard from the Mexican airline Volaris earlier that they dramatically increased capacity and use that to handle 3x more customer interactions with the same workforce. In fact, most of the customers you heard from today are not talking about making workforce reductions. They discussed using the increased agent capacity to address pent-up demand for more interactions and improve the quality of the service they deliver to customers. As brands adopt more bots from the Verint platform, they will see even larger increases in capacity, and we will eventually get to the point where they can achieve all the CX objectives and still have extra capacity. At that point, we expect brands to begin reducing the size of their workforce. Let's look again at Dan's example. If we assume an alternative scenario, and instead assume the customers would use the 20% increased capacity to reduce 20% of their headcount, it will lead to a reduction of 1,000 people from their workforce. In such a case, Verint's WFE revenue would be reduced by around $200,000, based on an average WFE price of $200 per agent per year. At the same time, Verint will pick up about $2 million in AI revenue, representing a 10x revenue opportunity for Verint annually. So, regardless of the customer's decision of how to use the increased capacity delivered by CX automation, Verint's revenue opportunity is significant. Given what we're seeing today in the market, let me now discuss our assumptions for how customers will use the increased AI-driven capacity and the positive impact on the Verint economic model. Today, our software helps manage 4 million agents with an average customer charge of $200 per agent per year. Near term, as we increase capacity for our customer base, we are assuming customers will generally make minimal workforce reductions for the reasons we just discussed. Longer term, as customers purchase more bots to increase capacity even further, they will start to trade off Verint agent licenses for Verint bot licenses. Verint is encouraging customers to do this trade-off as it provides us with a 10x growth opportunity. Longer term, we believe that we have a significant growth opportunity as the estimated $2 trillion of CX workforce spend shifts to technology. As Jamie mentioned earlier, we are entering a new chapter of AI adoption as brands shift from science experiments to demanding solutions that deliver tangible results. We believe we are incredibly well positioned for this next chapter with a highly differentiated CX platform and proven AI business outcomes. Today, we shared many examples demonstrating that regardless of the assumptions investors make on the pace of workforce reduction in Verint's customer base, Verint is well positioned to grow revenue. In addition, our proven success within our base of leading global brands makes us well positioned to sell CX automation solutions not only to our base, but also to new customers. We believe the CX automation market is in its early innings, and AI adoption will surely accelerate. Longer term, we're targeting double-digit ARR growth and double-digit free cash flow growth. Overall, we can't think of a time that Verint has been better positioned, and we are very optimistic about our future. With that, let's move to